I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's on the top of your mind this morning?
Well, I mean, the president at approximately 5:20 kiboshed a rally. I've been saying, actually, none of this is like revelatory. I've been saying that the hardliners in our White House were upset that the Mnuchin, might as well give the whole list, Kissinger, Larry Kudlow, Steve Schwartzman, that group was all in favor of a phase one deal, Hank Paulson, and they tied the president's hands by saying they were in favor of a phase one deal in return for not raising the December 15th. They thought they had a deal, but the Chinese immediately double-crossed the president and said, well, now we're not in favor of staying the December 15th. Now we want a rollback of the earlier ones. And that was always a non-starter, and the Chinese knew it. So what the Chinese were doing were walking away from the talks. And this is exactly what the hardliners said would happen. The hardliners were very right. Now, how many times the hardliners could be right before the president realizes that you don't want to keep the people who keep leaking to the press that there's going to be a deal? So the top of my mind was that I was right, and that and Larry Williams is right too from off the charts this year, but I was right that the president got double-crossed, and just like in Argentina when the president was double-crossed, and this summer when he was double-crossed, he tends to react pretty violently, and that's what's happening, and I can't blame him one bit. Hate him or like him, he was double-crossed.
Jim, now that the president is saying that we may not get a trade deal until after the 2020 election, should investors change their game plan?
No, not at all. I have a real money piece about why that would be wrong. I think that what you have to do is take pain. Periodically, you have to take a lot of pain. Larry Williams says the pain was going on into February. I do think that the pain's real for a while. The VIX had gone down too low, and there was too much optimism about a trade deal, given the fact that the most important part of the White House was against a trade deal. So you got to pay the price, and we're paying the price here. But if you leave right now, and we're circling the wagons around a couple of positions, but if you leave right now, what happens is, you're going to miss maybe another 3 to 4%, and then try getting in. Just try. I mean, that's the big problem. And I think that one of the things that has made it so I am always reluctant to say get out now is because you're in a situation where it's not readily discernible when you should put the money back in. Those of us who are waiting to make our contributions in the 401k, we're not thinking about pulling out. We're thinking of when to make a move. And I think more people are involved in my view. We're trying to make my kids' contribution. We just do index funds. Don't worry. We don't say within the next 48 hours I'm going to hold the position. We feel very strongly that index funds are the bedrock, and just looking for the moment. And I said, don't buy yet. I said, very specifically, you got to wait at least 3 days. Probably look by the end of the week to start staggering that money in. But, if you pull out now, you sell Walmart at 117, you get some 114, you're going to put it back in. This is why I always say, since Apple was at 5, there have been, I don't know how many of these. Last time I did Salesforce, how many of these? There's been 4 of them. I don't think Salesforce can go up. Coupa didn't go up, and Coupa's quarter was amazing. So I think we have to recognize that what we're dealing with is a panic necessitated by the president taking a very hard line after being double-crossed. And, you double-cross the guy, he doesn't react positively. And why? I said that yesterday, so he got double-crossed. So I expected it to go down, and we're going to circle the wagon around a couple of excellent names, of which I'm not going to give you because you get this for free, and I got to protect the right of the club members who pay dues to me. And I think a lot of people online are saying, well, you got to give it to me free. And I say, well, no, I don't.
And they can tune into our next show, which is our Actionalers Plus Daily Rundown show, which we film right after this.
I'm not being greedy. It's just that, when the internet started, I decided at TheStreet.com, which I no longer own, or, there's no stock now. I decided that there was always going to be a free and a paid tier. The reason why we were one of 3 IPOs that succeeded during a period when 330 went under was because we kept the paid and the free. So I can't give away the paid. It's not right.
Jim, I want to circle back. Now, as you already stated in your real money column this morning, you did talk about taking pains in this market.
Yeah.
But I want to take this from a new investor angle. If I'm a new investor, I'm looking at the Dow, it's down 418 points at 10:11 a.m. Give me one reason to stick with this market.
Well, you're a new investor. You don't have anything in, or you're a new investor and you have something in?
I'm a new investor and I do have something in.
Well, I never say buy it once, so if you've been listening to my dictum, you're fine. I mean, I can't help the people who don't listen to the dictum. I mean, it's like, hey, I'm sorry that you did what I didn't say to do, so let me explain to you why you should not do again what I said. I mean, look, we've been recommending only a couple stocks you've been selling. I can't help people who aren't members of the club.
Jim, we've got Salesforce earnings later. I'm wondering, what's one thing that you're keeping an eye on? And I know that we're going to talk more about this name.
Anyone gives a damn about what they report. I think that they could say that they're going to be a 5-for-1 split, boosting the non-existent dividend, and buy back 50% of the stock, and it wouldn't matter. I mean, we're in a downturn. What you want to do is you want to look back at the 2014 downturn, the 2016 downturn, and get a sense of what can occur. You have a stock like Okta that was down 10 yesterday. Okta's really on fire. Coupa, which is on Mad Money tonight, just had a fabulous quarter. But people look at the stock and they say it must not have been a good quarter. United Health was at 282. It was up 2.5 points before the president lowered the boot. So now suddenly UNH wasn't good. I mean, this is all. These are people who are doing these things. They're looking at the tape and saying, therefore, the stock was bad. And Catherine, that's simplistic. What they should be doing is thinking about a company where they want a piece in it. And if not, then they should own index funds, which are, I love index funds. As I said here, I did not talk about committing money for kids' individual stocks. That's not what I can do, nor I would do. I buy index funds. And I'm sitting here trying to think about, okay, let's see. Market's down badly. It was down badly yesterday. It was down on Friday. At what point do I commit that capital that I've been waiting to commit all year because I have, it's when the government gets a chance. And I guess I don't have any choice. I have to do it pretty soon.
All right, Jim, thank you so much for joining us. Now, guys, remember, we've got our Bull Market Fantasy live show airing around 10:45 a.m. this morning. You're not going to want to miss it. And, of course, we are now heading over to our Actual Alerts Plus Daily Rundown show, where, as Jim's already alluded to, we're going to be talking about Salesforce. We're going to be talking about new names that they're thinking about. So, Jim, thanks for joining. Guys, thanks for watching. I'm Catherine Ross, and we'll see you tomorrow.